Welcome to the S&P 500 weekly market pulse for the trading week of July 27 through July 31st, 2026. I am Mohammad Qalul Hussain and we are breaking down everything you need to know about the week's market action, the numbers, the winners, the losers, and what it all means for investors. Let's start with the headline numbers of the week. So before that, I am sharing you the screen with the dedicated page from where you can get everything else. This is my market information here. So this is the index movement. The S&P 500 marched higher this week, climbing 77.74 points to close at 7,489.72, marking a solid 1.05% gain. While we saw some turbulence midweek with a sharp 1.52% drop on Wednesday, buyers stepped in with authority on Thursday, delivering a powerful 1.66% rally that wiped out the losses and the sum. The index finished the week on a strong note, adding another 0.70% on Friday. What started as a cautious start with tiny gains, Monday and Tuesday turned into a story of resilience as the market surged up volatility and power to new weekly highs. Now, S&P 500 weekly sector gainers. Energy led the charge this week, skyrocketing 2.32% as oil price jumped. Healthcare wasn't far behind, surging nearly 2% as defensive positioning and some blockbuster earnings reports attracted buyers. Consumer discretionary and information technology both posted gains over 1%, while communication services round out the winners with a respectable 0.89% advance. The bulls were clearly in control in these sectors. S&P 500 weekly sector losers. Utilities got hammered this week, plunging over 3% as the sector that had been a safe haven suddenly became the week's biggest loser. Industrials also took it on the chin, falling 2.14%, while real estate, materials, and consumer staples all surrendered ground. Even financial could not escape the selling pressure, dipping slightly. It was a classic risk of rotation within the market as investors shifted from defensive names into growth and energy plays. Now, S&P 500 sector PE ratios. Valuation spreads across sector remains wide. Information technology commands the highest valuation at nearly 60 times earnings, reflecting the market's growth expectation for each names. Real estate and communication services also trade at lofty multiples, about 447 times. On the flip side, financial offer the most attractive entry point at just 21.2 times earnings, followed by utilities and energy in the mid-20s. The average sector P sits at 37.3 times, but with a massive 38-point spread between the most expensive and cheapest sectors, there's plenty of room for attractive management decision. Now, S&P 500 weekly top 10 gainers. What a week for some other names. Gleamin Limited GRMN absolutely exploded higher, rocketing 21% as investors rushed to get in on the action. Microsoft Corporation MSFT was another monster winner, surging nearly 20% to close above $464. A remarkable move for a mega cap tech titan. Cognizant Technology Solution Corporation, CTSH, and Amazon Corporation both delivered gain north of 17%, north of 17%, proving that the growth trade is far from dead. Healthcare names Regeneration Pharmaceutical Limited Incorporation, Reason, Dexgen, Dexcom Incorporation, DXCM, Baxter International Corporation, BAX, and GE Healthcare Technologies Incorporation, GEAC, all posted double-digit percentage gains, with the sector accounting for 4 of the top 10 spots. The average gain among this group is jaw-dropping 15.24%. It was a brutal week for some names. Lennox International Incorporation LII got crushed, tumbling 24% as the stock gapped lower and never looked back. Verity Holdings Corporation VRT and CH Robinson Worldwide Incorporation CHRW both suffered losses exceeding 15%, while NXP Semiconductors NXPI, GoDaddy Incorporation GDDY, and Qualcomm Incorporation QCOM each shed more than 13%. Coinbase Global Incorporation COIN, Fair Asia Corporation FICO FICO, Masco Corporation MAS, and Textron Incorporation TXT rounded out the loser with declining over 11%. The industrial sector dominated this list with 5 stocks in the top 10, signaling significant sector rotation. The average loss among these underperformers was a painful 14.53%. S&P 500 P rotation ratio analysis. The valuation extremes in this market are truly something else. At the very top, Intel Corporation INTC trades at the staggering 675 times earnings. That's not a typo. Microchip Technology Incorporation MCHP, Plenty Technology Incorporation PLTR, and Datadog Incorporation DDOG all sport PE ratios above 400 times, while Potosky PSKY and Cine Corporation CIEN aren't far behind. These are companies where investors are paying a massive premium for future growth expectations. At the opposite end, you have got Comcast Corporation CMCSA at just 4.7 times earnings, Charter Communication Incorporation CHTR at 5.5x times, and a cluster telecom and cyclical names reading the single digit 670-point spread between the most expensive and cheapest stocks shows just how segmented this market has become between growth and the value investors. S&P 500 leaders, turnover leaders. Liquidity went through the proof of week. Micron Technology Incorporation MU absolutely dominated trading activity with an eye-watering $27.1 trillion in turnover volume. Yes, you heard that right. Trillion with a T. SanDisk Corporation SNDK and Nvidia Corporation NVDA weren't far behind, each generating over 15 trillion in trading volume. Microsoft Corporation MSFT, Apple Corporation APL, and Amazon Corporation Incorporation AMZN all show massive institutional interest with combined turnover exceeding 34 trillion. That means 34 trillion. Advanced Micro Devices Incorporation AMD, Meta Platform Incorporation Meta, Tesla Incorporation TSLA, and Intel Corporation INTC rounded out the top 10. The technology sector claimed 7 of the top 10 spots highlighting what the smart money is concentrating. Average turnover among these leaders reached approximately 12.1 trillion, signaling intense capital rotation that often precedes volatility clusters. So, weekly market summary takeaway: the S&P 500 delivered a solid 1.05% gain, closing at 7,489.72. GRMN was the week's star, performing with a stunning 21% rally. LII was the biggest laggard, dropping 24%. That is, Lennox International Incorporation dropped 24% this week. Energy led all sectors with a 2.32% advance, while utilities sank 3.07%. Technology still commands the highest sector P at 59.6 times, while financial offer the best value at 21.2 times. Turnover hit extraordinary level with MU leading 27.1 trillion. So we saw major that meaningful movement this week with a notable midweek shakeout that was quickly bought. Sectors like information technology and healthcare dominated institutional conviction, while defensive plays like utilities and staples got left behind. The extreme valuation spread between growth and value stocks continued to be defining market feature, creating opportunity for tactical investors. Invest strategic takeaways. Be selective. This market rewards patience and precision. Consider trimming extended positioning and adding to sectors showing technical improvements. Balance your portfolio between high growth tech names trading at premium valuation and value oriented stocks, sectors like financial offering downside protection. High turnover stocks provide excellent liquidity but also signaling potential inflection points. Watch volume as both an entry indicator and a volatility warning sign. The extreme PE spread between growth names like INTC and value names like CMCSA suggests a market that both chasing growth and seeking safety. Blend both strategies in your portfolio. Energy continues to attract institutional capital. Consider overweighting this sector while monitoring for rotation signals. Stick to disciplined position, seizing with 1 to 3% per position. Use stop losses and maintain drivers fiction across sectors and market caps. Don't chase extreme moves. For high flying names, wait for pullbacks. For bargain stocks, accumulate gradually and focus on improving fundamentals. Federal Reserve economic indicators. The Fed funds rate holds steady at 3.63% as of June 1st. Inflation remains elevated with CPI at 332.57 and core CPI at 336.06. Unemployment sits at 4.20%, while GDP stands at 24,270.60. The 10-year Treasury yield has climbed to 4.68%, putting pressure on rate-sensitive sectors. PPI checks in at 286.83. This indicator suggests the Fed remains data-dependent, watching for signs of cooling inflation before considering any policy shifts. So please subscribe our channel and visit our website Capital Insight BD and stay tuned. Next week we will meet again with S&P 500 data. Bye for now. Enjoy your weekend. Thank you very much.